Okay, so it is currently January 3rd, 2024. This is our first market dissection class of the year, where we jump into price action of the day that we just traded, to better understand what we did, what we could have done better, how could we have minimized our losses and capitalized on our gains. So I'm just gonna jump right into it. Please leave all questions to the end of the session, and I'll open up the floor to anyone that has any questions so that I can answer anything that you have on your mind. Just, coming into session today, I always have the 15-minute chart on the left-hand side over here, and I run this with the opening range gap, meaning that US session closed up here and we had US session open again over here, such as how the ETF would be opening up. So I always like to keep the 15-minute on the left hand side with the opening range gap to understand where is the potential, buildup of liquidity that we can run out. Obviously, with the team, we've been talking about short bias for the entire week. We called out shorts on Monday that ran about 250 handles, and we showed up today with the anticipation that there's going to be further shorting opportunities to extend down to this take profit level that we have marked out down here. So just jumping into it on the 5 minute currently, this is 620. So I'm going to give it two more 5 minute candles. So this is the 630 candle after it closes on the 5 minute. We've taken out sell side over here, so there's clearly nothing to be done. It's just a matter of waiting. We understand that if price were to go without us, we are completely okay missing it. This is not a place that you come to where we have to call a trade or there's going to be something for us to trade. We understand that these moves repeat themselves on the daily basis, and no matter what, we're going to be here to catch the move day in, day out. So we just need the right opportunities, especially with a group of full-time traders. We try to limit our risk as much as possible. And so, just looking at the 630 opening candle, it's just two-sided. And anytime we have a two-sided candle or bias, we can't touch it. Only when we have one side confirmed and we know that it's going to be running in a clear direction is when we're actually going to be taking a trade. So just waiting, waiting, waiting. Okay. So over here, we're going to jump into the 1 minute because we were actually looking at this and we were anticipating, if this candle pushed up and these two candles pulled up over here, if this candle could hold, then we would potentially take a long entry over here. We talked about how this candle down here, if this one were to be traded back into at this stage, then we would no longer be interested in the long. So understanding that this was a weak bull candle. I also had an FEG marked out from 630. What is this? 633 to 635. So once I came into session over here somewhere, we marked this out and we knew that, okay, we shouldn't break this area if it's going to long. We have buy side up here, which we clearly tagged out, and we have further buy side up here. But in order for that to be a continuation to long up to this level, then we want to see this candle hold over here at the 704. All these candles that I have referenced on the screen here are in Pacific time. I'm on the West Coast, so I always look at it in Pacific time. But understanding that, okay, this candle down over here invalidated the entire long setup, I would take a short right here, and I would put my stop right above that candle. And the first take profit would be down here. And I would want to see it if it can snap that and drop any further than that. So for the time being, we understand that this is the take profit. And when we do get down there, we'll take a partial. But if it continues to run, then I want to participate in the rest of the run. So I'm just going to put this down here because, again, our take profit is this line down here that we had marked out from earlier on in the day. And I'm just going to play out price to understand how it went from this point. So sell side over here, mark that out. And here we go. So we had a hard close past that level. Since I had a hard close, I'm going stop loss break even on this trade. We're already up. Oh, what happened? Okay, there you go. We're already up $3,400. At this stage, I'm going to go in. I'm going to close a portion of my position. So I've locked in $1,380 here. And I want to see if we could drop down further or how the candles are going to print in this area. During this time with the team, I said I would like to see it just, have a minor retracement and then accelerate further to the downside. So for that reason, I just want to pay attention to see what's going to happen. I've already locked in profit on the day. I don't really care what else it does. If it runs to our take profit all the way down there, then the rest of our contracts are gonna make around $7,000. So I'm just using 5 contracts to be very on point, because 5 contracts every handle is gonna be $100. So with $1,600 risk, we've already locked in $1,400, which is pretty much a 1-to-1. But I want to see how the rest of the trade plays out. So I'll give it the next candle. And we see it's trying to pull back. Now I understand that we broke out of a low and retail is anticipating for this low to be retested so that they can go short over here. So I wanted to just make sure that, we're going to continue down, and if we do just drop from here, then great. If we do pull back, I'll take more off of my position. So let's see what the next candle's presented. So since this candle has broken out of this low and is showing some sort of weakness, maybe I want to clear out one more of my position since I'm up $3,000. So I would take a profit right there. Now I'm up $2,300. So $1,600 risk, $2,300. We're above a 1-to-1, close to a 1-to-2 already. And I just want to see how the rest of it plays out. So looking at this candle, I'm already a little concerned because anyone that was retail entered short in this range. They gave them a little bit of distance. They're getting happy, but I know their stops are being placed up here. So most probably that stop is going to be tagged out. If price comes back up here, then I'm going to exit my position in full, because I don't want to see it come back and then come all the way up and then drop again, because my entry has landed within this inversion fair value gap that's placed up here from the 633 to 635. So when this candle presented itself, I said that's a very bad candle. So at this stage, I want to go in, and the reason why it's a bad candle is anyone that's retail has, their break of structure, retest, and drop further. So their entries got triggered by this wick. They're seeing this candle. Anyone that didn't have a limit order here is entering short on this candle. I want you to pay attention to what happens right after this candle. But because I see this candle and I know that I'm up 2,300 on the day, I have another floating 1,580. I'm just going to clear out one more position right here, and we're going to see where it goes from here on out. So let me go next. You see how they immediately accelerate price and take the stops that are placed above that candle. There's a reason why we don't like candles like this. Candles like this are not good for us. Now, if I were to go to the 5-minute time frame at this point and look at this price, this doesn't look good. The only way that this thing can drop is if it just starts accelerating straight down from here. But most probably, we're going to get back to our entry point over here. So maybe I just want to lock in a little bit more profit on this position and see how the day is going to play out. At this stage, I went in and I pulled out the market open range, and that's this line that we have over here. So I'm always watching the 50% of the market open range, and I want to see, okay, if we did break out, are we going to accelerate downward or are we not? So I'm going to give it a few more candles. So on this candle, we actually entered, but it's too late now. I can't enter this like this. So we actually took this entry over here and we had positions right here. If it comes back into this area, I might get into the position. If not, and it continues on down, I'm okay holding the rest of my trade over here. So I'm going to play out a few more candles. So I'm just going to put in the entry over here. I'll add one in, maybe two in, and I'm going to reduce this risk above this high because I know that on the 5-minute time frame, we've tapped into this candle right here and we're failing to break out of there. These are weak candles going up. So the only way that this thing can accelerate up is if it has a massive candle from here. And I understand that since this broke out, there's a possibility of a further continuation. There's further sell side right here, meaning that people that are retail are waiting for this low to break because they're waiting for this. They're waiting for, okay, the low snapped, it dropped, came back, retested. If it goes and breaks here, then it most likely will continue down to lower prices. So with that being said, I understand what I'm looking at. Even though in this entire choppiness of a market that I've been looking at all morning, I understand the retail logic that's going behind the candles that are presenting to me over here. Now, I want you to note the fact that as this is happening live, I'm talking about all the different things that I'm mentioning to you over here. So I added back 2 contracts. My risk currently is $360. I want to, if I'm looking down and I'm up $3,000 and I see that my risk is only $360 up here. If I get another candle up here, I might enter one more contract, understanding that my average price will probably be somewhere around here. And I'm completely okay risking that money because I've already locked in that profit. So when I give it the next candle, it pulls up. Add one more. So I'm risking $570 out of my total profit that I've made on the day. As long as this high holds, I'm good to go. Sell side right here, most likely entries placed right here, and that's what I'm thinking. Entries are placed there. So price has to accelerate down to this level, and then we'll see what it does from there. So we've broken out. We've triggered retail short. This is an issue where my position is. Because if it wants to come back, this is the first place that their stop losses are going to be. Either here, above these candles, or over here. So since I'm up $2,000 again, I'm going to clear out 2 positions. So now I'm up 4,300 on the day. I move my stop loss to break even, and I leave it be. Dropping down further, I still have 2 contracts. Maybe close one more out over here. Continue. So, if this candle, let me zoom in on this. If this candle broke this candle, tapped into this area, I want this to be a liquidity grab. On this previous candle, I mentioned to the team that this is the exact spot that I want to see it fall from. If we can't fall from this spot, this is a major issue and they're most likely going to accelerate price up to this level. So I'm just going to play this out so you see what happens. So timing of the market. It's currently 7:49. If this next candle pushes up, then I know it's going to accelerate to this top box because 750 algo is about to kick in. This box that I have drawn out over here is the 750 candle that you'll see in a second. So you see, I pulled it from the bottom of that candle to the top of that candle. That's something I like doing. I always pay attention to that spot where the algorithm kicks into effect. I said I'll close out this position. So at this stage, I'm anticipating that we're going to pull up to this level. So I'm going to enter. And I'm going to put my stop loss right below this candle right here, because this candle tapped into this area. So I'm anticipating for this thing to pull up to this box. This is my full confirmation candle. So I'm going to add my full position in again. Move my stop loss below the box now. So I'm risking 1,100 off of the 5,000 that I have. And boom. That's my take profit. So I've cleared out $9,500. Now I'm waiting. If I were to talk in handles form, if I'm dropping 5 contracts and I'm up $9,500, that's a total of 95 handles caught. So I'm just waiting at this stage to see, are they going to accelerate this thing up? Are they going to hold the 50%? What are they going to do in this area? Are they going to drop this thing down and then pull it up? What's going to happen? So we're in a fully hands-off situation with the team at this point. We're just waiting to see how they're going to print this area and what's going to happen. So looking at the 5 minute at this stage, I can see this close. Let me remove this so it's cleaner. I can see this close. I don't really like that close on the short side, so I have to wait longer. My bias is short. If they want to long it up, great. Let them long it up. I've already made my profit on the day. I don't really care if they long it up from here 100 handles, 150 handles. That's fine. Because if it is going to long up, it's going to set me up something up here before it goes. So this line that I have marked out is this 50%. So the full day worth of 50%. So I have the opening range 50% and then where we pulled down to all the way 50%. So I have these two levels marked out at this point in time. Going back to the 1 minute, I understand where the 5 minute is trading, and I just want to see how this thing is going to play out. So at this stage, I'm just really happy that I'm not in this area, because if I entered short on this candle, I'd get stopped out. But I could see the rest of the day. I could see the choppiness. I could see, okay, one drive, another drive. They're just tagging everyone out. They're trying to milk the retail trader from all profits that they have. So I'm watching this with the team. We're just chit-chatting, answering questions, anything that they have, telling them how to manage risk at this stage, what we can do better, all that stuff. So I see this candle drop right here. So I'm looking at this candle and I see it swept this low. I want to give it one more candle. One more. This isn't a bad spot to enter. But if I put this position on, I have to put the stop all the way up here. I don't want to see it go back into that box because we've already exited that box. The current 5 minute candles look like this, so it's showing signs of weakness. We're about to pull back into the structure that we have down here. We've knocked out majority of retail. Retail is confused at this stage. They don't know if it's going to long or short. I'm up on my day. I'm willing to risk $555 of my 9.5 that I've made. So let's see. If I put one on and I put my stop loss right here, that's 360. You know what? I'll put on two. So 740 is what I'm willing to risk. My take profit 1 will be right here. 2 will be right here. But since I'm up on my day, maybe I just want to run my BE after it goes into profit. And I'll just wait to see if we could get down to this level and take a position off over there. So I'm going to allow this to run a little bit. Okay. We had equal lows. We had this high. Price came back, left leg, right leg. This is the structure. When you see something like this, where we had bodies close underneath, and then bodies came and closed above, that's potential liquidity buildup right there in order to run these things down. Because these are two big candles. So retail traders don't want to put their stop up here. And we're holding the bottom range of this box. If I were to measure this range from the bottom of the box to the top of the box, we're holding underneath the 50%. We are trading at and below the 25%. So with that being said, I know that this is a fairly good spot to go short, add to my position, be able to bring my stop down to this level. So I only have 430 on now. I'm going to add a position back to the 800 level. And I'm going to play out price to see if we can accelerate down to this level, potentially break it to move down to the take profit that we have down here. So we've accelerated a good chunk. I put stop loss break even. And since I'm up currently 1,500, I'm going to close out a portion of my position. I have one contract on left. I've locked in 10,500 on the day, and we move forward. Remember, this is sell side right here. Boom, I'm out. So we showed up at 649 today, and we left at 9:35. We've been here a total of 3 hours. During this entire trade, after I took partials over here, I was gone. Majority of the team left. Full risk off the position. If it is to accelerate, great. If it doesn't, we've locked in more than we need. Somebody sees this number down here, and they could be done for the month. There's no reason for them to show up. It's very hard psychologically to accept that you're done within 3 hours for the month. As humans, we're programmed by whatever you want to call it, the system, the matrix, whatever you want to call it, that if we don't put in work, we're not going to make money. In this game, you have the potential to make money so quickly that it's difficult to maintain. Because you cannot be patient. You cannot understand that if I'm up $5,000, $6,000, $10,000 on a day or on the week, you don't have to show up anymore. So if I made this money, and this money is a significant amount for me in my life, and this is a personal question, if that money is a significant amount for me in my life, then I want to make sure that coming in tomorrow, I'm not gonna risk the $10,000. It doesn't mean that you come in tomorrow and you increase your position size. It means you decrease your position size, risk less, because you already made your money for the month. We're done here. The rest of the day, I don't even care what happens. It can go to the take profit, it can not go to the take profit. I managed my risk correctly. I waited until the moments that I had to enter the trades in, the direction that I wanted to enter. I waited patiently for everything that I wanted to set up. I didn't jump the gun. I didn't FOMO. I didn't think, it's going to go from here, it's going to go from here, and then get stopped out. You see the choppiness. You see this. This is not clean price action. For all I care, sit out today. I had some teammates today sit out completely because they caught the short yesterday. They even need to trade today. Or maybe you didn't trade yesterday and you didn't trade today. Guess what? Tomorrow is a new day. But if you came in today and you took hit after hit after hit thinking this is the spot, this is the spot, this is the spot, next thing you know, you look down on your account and you killed either your account or the margin that you needed for the clean move to present itself. I know that you've all been in that situation where you blew an account or you killed your margin on a choppy day like today, and then the next day comes in, presents the perfect picture opportunity, but you can't even enter it with the size that you want to because you destroyed yourself yesterday. I know 11 a.m. was news today. You know what I did at this stage? I went to bed. I was tired. I just got back from vacation yesterday. I went to sleep. I worked for 3 hours today and I went back to sleep. I don't need to sit here. Even if this number that you're seeing on my screen is 10%, you made $1,000 in 3 hours. That's $300 an hour. I can almost guarantee your job isn't paying you $300 an hour. This is why we do these classes. So that you understand that. So that you understand that you don't need to trade every single day. So, with that being said, I'm gonna wrap up the recording here and we'll do the question and answer session off the recording. But since I'll be posting this video on the YouTube channel, I just want to say if you like the video, please give it a thumbs up, hit the subscribe button. If you want to trade with us live, you can find the business link in the channel, and we hope to see you there.